So next up, we're going to talk about financial services for SMEs, building solutions as innovative as they are. So we have Salvador García from eBury. eBury provides these kind of payment and lending solutions to corporates and SMEs. And I was chatting with Salvador backstage, and I like to call him a reformed or reforming banker. So he actually formed eBury in 2009 in the wake of the financial crisis that happened then. And so he's a banker turned entrepreneur. Some of the banks you've worked at, ABN AMRO, Rabobank, Vega Capital, and you've really been focusing on FX and interest rate derivatives before you began this. Interesting fact about him, he loves skiing, but he struggles to find the time right now because of his 2 young daughters. So with that, Salvador.
Hello, good afternoon, everyone. Welcome to Madrid. I hope you are enjoying the city and the event so far. I'm going to talk about disruption in financial services, how technology is disrupting this industry, why it is happening now, how it is happening, how a new stack is being built for fintech companies, what has been achieved this far in terms of improving customer experience, and where we think at eBury that things are going, not only for us and the platform that we are building, but also for the whole industry. So why fintech, or why technology is disrupting financial services? When I started eBury in 2009, probably fintech didn't exist as a name, but this was an industry that was ripe for disruption. So there were many factors contributing into it. The first one is that technology is changing our lives. Everything is becoming easier for us. The way we socialize, the way we book a restaurant, or how we can order food from our favorite restaurant when we need to be at home with our young kids in just a few minutes and knowing exactly when the food will be arriving. So that is also making us more demanding when it comes to other service providers. So we get used to a digital experience with many services, with many products, and we don't want to wait at a branch or to be queuing or filling up a lot of paperwork for our financial services. So what has happened is that technology is changing our lives, and technology is making us much more demanding, and we demand that digital finance experience or that digital experience out of financial services products. And that is happening, or that has happened at a time where banks or the incumbent in the sector, which is a common theme in sectors that are being disruptive, are going through several problems. In this case, they have a huge regulatory burden or huge regulatory pressure, but they also have clients or a revenue pool that they can cannibalize if they are the ones that bring innovation and cheaper products. And they are also burdened with heavy legacy systems that make innovation harder. So all of those components made financial services an industry ripe for disruption. So how is that happening? How is that disruption occurring, or how is this rebuilding of financial products and financial services being built? What clients are experiencing is better products, faster products, a much better user journey with websites or applications. Fintech companies don't have branch networks to interact with clients. They interact through their platforms. But it's not only how these companies are interacting with their clients or the front end that clients are accessing to. It's a whole stack that is building the products or is enhancing the products that clients see. A key part of that stack for us at eBury and for many other fintech companies is data. So in what we call that middle office layer, you had before very expensive risk management systems. Now what you've got is a lot of data and machine learning that allows you to really build predictors and accelerate the processes. Also, as part of that stack, clear, you have the cloud technology that makes any company building tech much faster in going to market and a much cheaper cost. And you also have other components that are being developed. I think that we are quite excited with many things that are being built around blockchain or distributed ledger technology. So this whole stack is not only about what clients are experiencing in the way we interact with them, but it's everything that is beneath those products that is making them better or are creating a better user journey. And one key component that for us is part of any successful fintech company's secret sauce is around data. One way to think about it is that the economy is becoming digital, and we are generating way more data these days than we were generating before. For instance, if you're a company and you are selling on Amazon platform, you are generating data. You have the data with all the orders that you have on Amazon, how good you are at dealing with those orders, and what are the customers' reviews and how happy customers are with you. That means that a financial service provider can use that data to understand you as a client better and to understand, assess better your credit worthiness. So we think that data is a key component of that stack. I will talk more about how we use data in a minute. So with this stack, what has been achieved this far? I mean, this is something that is in the making, but what have fintech companies delivered already? So what we see is that customer experience has improved dramatically. So it's not only now that you can book food from your favorite restaurant in minutes and know exactly when it's going to arrive to your home, but you can also open a bank account in minutes. Or if you are a consumer or an SME, you can apply for a loan with a very easy-to-use or great UX website or application, and approval times are measured in minutes or hours, not days or weeks. Okay? So you are seeing a lot of companies that are bringing great customer experience in fintech. This customer experience is being built as a combination of a whole stack of new components that are being built. So what I want to explain a little bit more is what I know best, which is Ebury, how we have built that platform, how we are interacting with our clients, and how we are creating that experience. So if you think of what we do, we are a company that is focused on a client. We are customer-focused companies. We focus on SMEs or corporates that are trading internationally, and we help them with their cross-border friction, or the financial products that are associated to that international trade. Those clients are spread across the whole economy and are usually above 1 million in turnover, so they are not the smaller end of SMEs, up to 50 or up to 100 million in sales volume. And if you want to think, you want to understand what we do for these clients, you need to put yourself in the shoes of a small business owner. If you're a manufacturing company in Northern England, and for you to be competitive, you are importing from China, and you are exporting to Germany, for instance, there's a lot of complexity associated to that global trade that you are doing, and you are very thin in resources in order to do it. So what are the needs that you have? You need to properly manage the FX risk associated to those transactions. That's one of our core products or our core proposition. But also your working capital cycle becomes more complex. It doesn't take the same time to import from your local supplier than when you are importing from China. That takes much longer. Therefore, your working capital is higher and is riskier as well. So we help these companies with risk management, better manage the risk that they are using. And we also offer transactional products and lending products. Transactional products, we offer payments and collections, so they can pay their suppliers through our platforms very fast, or they can get paid from their clients when they are exporting and they need collection capabilities in other countries. And we also offer lending products, so we help these companies with liquidity to solve the working capital friction that they have associated to that international trade. So we do that through our trade finance product, but we also do that through the liquidity that we offer associated to our FX hedging product. And as I was saying, we offer many different currencies, more than 140 for these clients to pay their suppliers. So the journey for us to build the platform has been a continuous evolution between customer understanding and product enhancement. So over time, what we have constantly been doing is really understand how we can help our clients more. So our roadmap has not been about building a product, as is being about understanding better a client and a friction, and empowering these clients to trade globally with confidence. That's why we say, what borders? Okay. And through this evolution and this understanding of the client, we have been improving our product offering. So we've been empowering our offering. For instance, as we have seen more trade between the developed and the emerging world, we have been incorporating more currency capabilities to allow our clients to pay in emerging markets where there's a lot of friction. Or we have incorporated recently also lending products in order to help clients solve the friction that they have or the working capital needs associated to the trade cycle. If you look at our platform and how we are leveraging that stack, or that fintech stack, we are integrated with banks at the moment, more than 20 wholesale providers, from insurance companies to banks. We are integrated for FX trading through the FX protocol or for payment delivery through the SWIFT network. That integration is what allows us to offer the products to our client. And on top of that, we have built rules that allows us to do, for instance, intelligent routing on payments that is designed for speed or is designed for cost, depending on customer preferences. And the data that we use in this platform is key to our product offering. So you think of that stack, data is a key component of what we do. SWIFT network or SWIFT connectivity is not part of any new stack, or fixed protocol is not part of any new stack, but it's the way we have built these products. And we are very keen on how this platform will be evolving as the stack develops. So there's very interesting stuff that will be coming with the second directive for payment services, PSD2, that will allow us to integrate with banks through an API, that will allow us to get more data from our clients, and that will also allow us to action payments or action transactions from our clients' bank accounts from our platform. That's a way for us that will improve dramatically the experience for our clients. But also we see other integrations happening as we collaborate with other fintech companies. So this technology platform, we also offer it in a white label basis. We have more than 20 partners that are offering similar services to their clients using our technology. SaaS deliver and component based as you would expect. But something that is key for us in this technology and in our business model, as I was saying, is data. As I was saying before, these days the economy is becoming digital. That means that we are generating way more data than we were generating before. So what is data for us? Clearly, we've got a data team, and we are very excited about what this team is doing. And the roadmap is about capturing more data and then using that data. So what's the data that we are capturing? Clearly, there's data sources that are publicly available that are relevant for us to better understand our clients. But there's also other data that we generate ourselves. As a digital platform, we are constantly interacting with our clients. We may be interacting because our clients are in our platform trading online, or because we are interacting through marketing automation, and we see the open rates and which communications or which clients are engaging more with our content, or because a sales team is talking to a client, and we see which clients are engaging more with those conversations. Our big distribution network is empowered by data, but we've got a sales team that is interacting with clients, and our platform is capturing all the information associated to those interactions, and we instruct our sales team to capture more data. Okay. One example, for instance, is how we understand which clients we should sell a lending product and which clients we shouldn't. Because when we first incorporated our lending product, what we saw is that if you sell a lending product to the client, but then you decline the risk because the client is too risky, then you will not get the client for other products. So for us, we build the predictors, and now our sales team understand that there's 2 or 3 key questions that they need to ask, and they can enter into the system directly, and that will tell them whether the client will be approved for lending with a very high confidence or whether it will be declined. So we know whether the sales path is a lending sales path or is more of an FX or payment sales path. That's an example of how we use data. But data for us is used all through the customer journey, from lead generation, where we understand which clients have a higher propensity to buy our products, to customer engagement and retention or reactivation. We also use data for our risk models. So we have our proprietary risk models that over time, we need, as we calibrate the models, we need fewer and fewer data for us to approve of the client risk. That means that our approval times are declining over time. And also very exciting for us is as we enhance our customer understanding, we are aiming to be the platform that understands which clients have the propensity to buy which product at which time. So we think that a key part of our evolution will be incorporating more products. And for us to do that in an efficient way, we will be leveraging our data and our understanding of the client. And this data is what is really empowering the improvement of our quality parameters. In our platform, we are constantly measuring how quickly we can open an account, how quickly we can process a payment, how quickly we can approve a loan or approve an FX line. And as we try to optimize those processes and make them faster so that we can improve the customer experience, it's really about the data that we are capturing, enriching our models that allows us to be faster. Okay? So what's next? What's next in the industry and for Ebury? I truly believe that there is a next wave of fintech innovation, and this next wave is going to be driven by collaboration. And that collaboration is going to be two different flavors. There's one collaboration that is driven by regulatory pressure. I think that the new directive that will force banks to open their capabilities, to open some critical bank assets to their competitors, and open the data available to their competitors is going to be a key asset for new companies to improve their propositions. So that's one way of collaboration. Another way of collaboration is driven by commercial purpose. So that collaboration will be between fintech companies that have synergies for commercial reasons, or between banks and fintech that also have synergies where banks can use their clients or use their network to offer other products that they don't have, or a better version of their products that clients are demanding. A common denominator that we will see is that customers will be more and more demanding over time. So what we have seen in the last few years is that clients want a digital finance experience. What we will see in the next few months and years is that demand from clients will be more demanding. So that will be growing. And for us, what we see in this collaboration, we are really aiming to improve our customer knowledge and understanding of our clients and bring more products faster to our clients. So in our roadmap, we will be incorporating more products. The way we will build those products will be either through proprietary developments that we have done in the past, or through integration with other companies that have built the products, and we know that our clients are demanding those products. So we have different ways to improve or accelerate our product offering. We think that will be happening in the industry, which is that the time to market of a better customer experience is going to decrease. So what we are going to see over time is that more digitalization, more open architecture will translate of clients and customers receiving a better proposition, and companies being able to build very strong propositions faster. So that's everything. Thank you very much.